Bloomberg Audio Studios.
Podcasts, radio, news.
From the heart of where innovation, money, and power collide in Silicon Valley and beyond, this is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Caroline Hyde at Bloomberg's world headquarters in New York. Ed Ludlow is off. This is Bloomberg Technology. Coming up, exclusive reporting that chip giants TSMC and ASML, well, they can remotely shut down the key equipment in the event of an invasion to Taiwan. Details to come. Plus, we hear from Microsoft CEO Satya Nadella as its Build Developers Conference kicks off. And actress Scarlett Johansson pushes back against OpenAI and that eerily similar Sky Voice. All that and so much more ahead. But first, let's check in on these markets. We want to go higher. We want to keep those record highs going. It seems on the S&P, certainly. The Nasdaq turns flat. I'm pushing forward also to what's happening in crypto. We'll get back to what the major benchmarks are doing at the moment. But crypto has been a key story, of course. This all eyes shifting from what we saw was a spot Bitcoin ETF now to potentially a spot ETH ETF, but there is the Nasdaq currently just trading into positive territory. We are at a new record high. We're at a new record high in the S&P, not so on the Stoxx 600 over in Europe, actually off by about 0.25%, but all eyes focused on Fed talk today. Raphael Bostic, of course, still trying to analyze the data. Many of Fed talk coming to us, but also we're seeing what's happening with the 10-year yield currently off by some 3 basis points. So maybe a bit of buying into the bond market right now as we also push forward to what's happening in earnings. Let's have a look at some of the individual movers that we've been seeing. And Palo Alto Networks, one of the key fallers, actually coming off of its lows. We're down only now 4%. Why? Cybersecurity company just posting revenue that's 11%, well, 15% growth on a year-on-year basis. That's not the 20 to 30% revenue growth we were used to with a cybersecurity company. We're going to be speaking to the CEO a little bit later in the show. Nvidia trading flat ahead of its all-important earnings tomorrow. But what's key is its relationship, of course, with what they've been talking about in AI and Taiwan, how dependent they are on TSMC to deliver the sort of super chips that the market is so dependent on. And a really interesting piece of reporting, therefore, on ASML and TSMC today coming from Bloomberg. ASML is off by 1.5%. That's as we see that exclusive reporting coming from our colleagues showing that in an event that China invades Taiwan, both TSMC and, of course, the chip equipment making company ASML could basically have a kill switch. They can remotely disable their chip-making machines. We heard about the importance, in fact, of Taiwan from NVIDIA's CEO Jensen Huang at the Dell World Conference just yesterday. Take a listen.
Taiwan is at the epicenter of the world's technology supply chain. Without Taiwan, it would be very difficult for Michael and I to do our jobs. It would be very difficult for us to serve Bill and his company. And so the technology industry depends very heavily on Taiwan and continues to for some time.
The AI juggernaut has spoken, and he's saying that Taiwan is really important, as if we forgot. We're pleased to go join in Washington Bloomberg's Mike Shepard. This is an extraordinary piece of reporting. Ultimately, companies having to ease U.S. government concerns here.
Oh, that's right. And this is actually answering, with this reporting, one of the fundamental questions surrounding Taiwan, one of the big what ifs. For years, the U.S. government has warned that, China has its eyes on Taiwan and may try to reunite with the island using military force. Now, Beijing has said that they have no interest in doing so. They would prefer peaceful reunification, but they have not ruled out military intervention at the same time. So one of the key questions is what happens if this takes place? One of the big questions is what happens to the semiconductor industry. Taiwan is responsible for 90% of the world's supply of the most advanced chips, the kind that supply NVIDIA. We just heard from Jensen Huang talking about that, and it is so essential for the U.S. We saw during the pandemic, and more recently with the earthquake in Taiwan, the concerns about any sort of supply chain disruption.
Really what's phenomenal here is that ASML is the linchpin, really. It's shipped more than 200 of these very sophisticated EUV machines to clients outside of China, but they also do still ship to China, but far less technically sophisticated kinds of machines. Nevertheless, it looks as though China has really been making strides in self-sufficiency here, Michael.
Well, you're right, it has. And we saw a sample of that last year during U.S. Commerce Secretary Gina Raimondo's visit to mainland China. Huawei Technologies unveiled a brand new smartphone, a Mate 60, that featured a much faster semiconductor a processing chip than anybody thought they were capable of generating and using in a consumer device like that. It was a 7-nanometer chip, very, very small. And the U.S. was taken aback by it. And it was made in part with older generation ASML machines, but with technology that came from other sources as well. It was a sign that, the concern is that China will be able to catch up in terms of technological advances in producing these semiconductors. And it requires sensitive equipment like the kind that ASML makes. ASML is the only producer of these machines called extreme ultraviolet machines, and they harness light waves to create these tiny, tiny transistors that, you need a microscope to look at. And yet they do all these powerful computations of the likes that artificial intelligence and even military applications require. So the sensitivity of this is very clear. What we're talking about, though, also is a maintenance function, because these EUV machines, as they're known, they require a lot of upkeep. And the company, ASML, needs to be able to turn them off remotely just for maintenance purposes. However, they now have a geopolitical significance too.
Michael Shepard, weaving it all together for us so beautifully. We thank you so much. And look, it has real effects on companies' earnings here. ASML has said with the latest export controls on their ability to ship to China, they could see a revenue impact of some 15% this year. We look ahead to what's happening with NVIDIA earnings yet to come, and we know they've got exposure to China too. Let's weave it all together with Christina Hooper, Invesco's Chief Global Market Strategist. And I'm just going to kick off with, ultimately, China is a headwind. At the moment, we're at record highs across all major benchmarks in the US. Is China much of a headwind from your perspective?
I don't think so. Clearly, there are always going to be geopolitical tensions, issues, concerns, but markets have a funny way of putting blinders on and focusing on what's the most important, fundamentals, as well as monetary policy in these challenging times and these unique times. And so I think there's a calculus that has gone on that has said, yes, there are a number of risks out there, but we're going to keep investing and we're going to continue to enjoy the earnings growth that we've seen.
And talking of earnings growth, everyone waiting with bated breath on what sort of growth NVIDIA does indeed post after the bell tomorrow. In excess of 200% increase in revenue is extraordinary. There is a market move on the back of reporting coming from other titles today that maybe there'll be some sort of air pocket in between some of the more sophisticated chips that was being made from a Grace Hopper perspective by NVIDIA, moving on to the Grace Blackwell, and Amazon, for example, pausing the ones on the less sophisticated Grace Hopper. Does that ultimately matter more, the NVIDIA intricacies, the who's buying, who's not, than, say, Fed policy right now?
Well, for the tech sector, perhaps it's NVIDIA. But I think when we take a step back and look at what is likely to help markets move forward, it's rate cuts. Mm-hmm. The reality is that it impacts the tech sector in particular, because typically when we see higher yields, when the 10-year is higher, that exerts downward pressure on technology stocks and vice versa. The higher valuation names are more sensitive. So I think that right now is important. Certainly NVIDIA is important for NVIDIA, for semiconductors, for the tech sector. But right now, there is a wait on for central banks to start cutting. We've gotten a few little cuts so far, Swiss National Bank, Risk Bank, but now we're ready for more. And I look at it this way: as a parent of teenagers, a son who went through the college process a couple of years ago. He got into school off the wait list. Some kids got in early decision. They all wound up graduating at the same time with the same degree. And so we're going to see probably the first mover is going to be the ECB, maybe the Bank of Canada given the inflation print. But the Fed will be along this year as well, and we'll get a few rate cuts. We'll all end up pretty much in the same place, but we're probably going to see others start the ball rolling, other majors start the ball rolling before we see the Fed.
So in a way, be patient, Christina, but should you buy into tech for our viewers now on the basis of that macro policy?
Well, I'm not a believer in market timing because it is so hard to do. But I do think starting to increase exposure now as we wait for rate cuts to begin is arguably a very sensible strategy. Many investors, retail and institutional, are overweight to cash. And so certainly they should be taking some money off the sidelines and moving it into fixed income, locking in rates on the long end, but also they should be moving into equities. And it's not just tech. I think tech's very attractive, but for valuation reasons, European equities, UK equities, emerging markets equities, there are a lot of opportunities out there for different reasons.
And industry groups, utilities doing very well, but also because everyone thinks that's an AI play.
Absolutely. Who would have ever thunk it? That was not on my bingo card for this year, but utilities absolutely are an AI play.
So do you think that ultimately we should start spreading our wings from an industry perspective as well as a geographical perspective?
Yes, absolutely. But we have to recognize a lot of the very significant earnings growth is coming from the tech sector. Especially, when we look at the industries within tech, 3 of them are delivering double-digit earnings growth. So that is a compelling place. We just have to recognize that valuations are higher.
They certainly are. All eyes still on tomorrow's set of earnings. All great macro perspective coming from Invesco Chief Global Market Strategist Christina Hooper. We love having her here. Let's talk Zoom video for a moment. Reporting its first quarter results. And look, they beat expectations on the prior quarter. It's the sales forecast, perhaps, that had some people trying to understand where those conservative elements are lying and where the opportunities are too. Let's talk through it all as the shares push higher with Kelly Steckelberg, Zoom CFO. Great to have you here in New York with us, Kelly. And there is some concern about perhaps a more cautious forecast. Can you talk us through how you see small, medium-sized enterprise demand for your products at the moment?
Sure. So, first of all, we were very pleased with our Q1 results. We beat analyst expectations across revenue, profitability, and free cash flow. And we reported, Q1 revenue of $1.141 billion, up 3% year over year. We did see growth in our enterprise, which was up 5% year over year. And then in terms of SMB, which we've gotten a lot of questions about, we support that segment of our business mostly through our online segment. And that actually did better than we expected this quarter. So very pleased with the results across all of our segments.
You're a numbers person. We saw the number of enterprise customers declined slightly, but there was a reshuffling of who actually fills into those gaps. They're accounting for the difference of how you count customers. But why are they declining? Well, how do we digest that decline?
Yeah, what I really want to point out, as you just said, we did transition some customers from the direct segment to online just to promote better self-service. These are typically, much smaller customers. Where we continue to see growth is in the upmarket. So when you look at customers that contribute more than $100,000 of trailing 12-month revenue, that was actually up 8% year over year. So that's the segment of the business that is really helping us drive growth and where we're really focused. On the smaller end, those customers, we give them a lot of flexibility. They come and go as they please. They sometimes, turn the service off while they take a break with their kids, and then they come back when it serves them well.
Let's talk about some of the areas that you have been pushing into to diversify. In particular, I'm thinking of contact center, of workforce engagement management, of AI. Now, Citigroup analysts, and I know you love having analyst notes reported back to you, but they say they find it a bit hard to see a durable pathway to re-accelerating growth. Paint that picture there for us, the accelerating growth.
So we talked about this a lot on the call yesterday. We've said that we expect growth in the second half of the year to start to reaccelerate. You mentioned contact center. We announced yesterday we have over 90 customers now in our contact center that are contributing more than $100,000 of trailing 12-month revenue, which highlights these are sophisticated buyers, and our products are now competing with the top 4 in the Gartner Magic Quadrant that you probably know all the names of. And that combined with the strength we continue to see with Zoom Phone, Workvivo, which there was news about this last week where Meta is discontinuing its workplace, and we have been named the preferred partner for that transition, which opens up a whole new opportunity for us. So those are all the components that are going to lead to reacceleration in the back half of the year and then into FY26.
Let's talk about competitors, though, because Microsoft Teams is a strong one. And we understand that perhaps there's been some regulatory conversations coming from Zoom about unfair competition. How's that going?
Well, there's a lot that's going on in the EU around bundling. They unbundled it there. However, until they really get to a competitive pricing for their products, it's not really a level playing field. And that's what would serve everyone in this industry, we believe, the best, including customers, because having a really level playing field for the 2 strongest competitors, which is, of course, Zoom and Microsoft, we think is the best approach.
Are regulators listening?
I guess we'll wait and see how it continues to evolve.
Well, Europe's always quite busy and quite quick on their regulatory decision making, but I'm interested in what, therefore, you are doing for an investor base who is still waiting for this regalvanization, this reacceleration of growth. They're seeing some of the areas that you're pushing into and products. Jeffrey's saying, look, we want to see perhaps a little bit more buybacks in terms of shares. We're thinking about potentially strategic M&A. Have you got any news for the investor base there?
Yeah. So, reaccelerating and top line growth is absolutely our number one priority. In the meantime, while we are focused on investing there, we are also focused on giving returns back to our shareholders. So last quarter, we announced a $1.5 billion share buyback program. During Q1, we did buy back 2.4 million shares, and we will continue to execute that over the next 7 quarters. And in the meantime, also looking for opportunities to deploy our cash if we see strategic M&A opportunities that would accelerate top line growth or accelerate tech development as well. Those are the 2 areas that we really keep front and center.
So kind of acqui-hires potentially.
Yeah, absolutely.
Kelly, it's great to have you here.
Thank
Coming
you so
in from
much.
Texas to be here with us in New York, Zoom CFO Kelly Stackelberg. We really appreciate it. Meanwhile, coming up, we've just got to talk about crypto for a moment. Ether, surging on signs of momentum for that ETF approval. Will it come for spot ETH? We'll discuss next. Meanwhile, we just got to keep an eye on what's happening with Tencent, because there has been pressure. There has been, of course, a big new game, a blockbuster game that everyone has been waiting for. But within an hour, they had to basically put that game on ice because the servers were overloaded. Dungeon and Fighter Mobile has really got everyone very excited, but clearly some server fluctuations hurt on the interim. We're down by 2.9%. Analysts say this isn't going to be a long-term impact. This is Bloomberg Technology. Let's just talk about this rally in cryptocurrencies. It is underway amid signs of pretty much a momentum for approval of another spot ETF, but this time linked to ETH. Joining us now, James Seifert from Bloomberg Intelligence. We're up 23% in the last couple of days. We're used to volatility, but what are the tea leaves that you're reading here, James?
Yeah, so I mean, we've had these filings to spot Ethereum ETFs for months, since the fall even, and nothing over the last couple of months signified to us that there was any sort of approval. If you talk to these issuers, exchanges, you name it, no one thought it was going to happen. And then we started hearing from different people yesterday that the SEC reached out with comments and requesting immediate, basically, responses and updates to filings. The deadline for this was Thursday. It's May 23rd. And the SEC was basically silent, not interacting with anyone on these topics until yesterday, which tells us this was a huge change as far as I'm concerned. So basically, the SEC decided as of Monday, when they reached out to issuers, we don't know exactly when it started, maybe late morning, early afternoon, who knows. But the SEC basically started saying, all right, we're likely going to approve these things, and basically took the approval odds out of the abyss as far as we were concerned.
And therefore, you've moved your spot Ether ETF likelihood, probability to 75% from just 25%. Is this usual? Is this typical to have a sudden resurgence in the drama, shall we call it?
No, honestly, we were thinking about lowering our odds last week, but we only went to 90% for the spot Bitcoin ETFs, even though everything was pointing that it was going to get approved. We left that 10% because we heard rumblings that the Biden White House was considering stepping in to stop the approval of spot Bitcoin ETFs, which just sounds a little bit crazy on its face. But honestly, it seems like the exact opposite might have happened here. It seems like the SEC was likely planning to approve. There might even be denial letters drafted up, and it might be the Biden admin for political reasons that came in and basically said, you need to approve these things. We don't want to be too anti-crypto.
Interesting perspective coming from you, James. I'm interested, therefore, what it actually means in terms of institutional demand. What we saw was with the Bitcoin ETF, a whole host of new ETFs were launched, and suddenly a whole wave of money came in. Is the same thing going to happen for smart contract focus?
Yeah, so I do think that there is going to be a wave of Ethereum ETFs that launch. We don't know exact timing because this hasn't been planned out. The Bitcoin ETF was planned out for months in advance. There's a whole bunch of other filings besides this 19B4 approval that we're now expecting this week. There needs to be approval on the S1s or prospectuses as well. So we do think there's going to be significant demand for these things, but it will be probably some fraction of the Bitcoin ETF demand. So if you look at the market cap of Bitcoin, Ethereum is about a third of that market cap. Also, these ETFs, they're not going to be allowed to stake, which is like there's native yield in using Ethereum. So if these ETFs cannot stake, that should probably likely diminish some of the demand. So if you take the demand in the native crypto market and say it's about 30% of Bitcoin and then discount that a little bit, I think there will be demand. So 20, maybe 25% of the demand for Bitcoin ETFs over the long term, or at least the near term after launch, if you're comparing them to Bitcoin. But that's still billions of dollars. I mean, we have $13 billion of inflows to spot Bitcoin ETFs in just 4 months. So even if we get 25% of that, that's still a pretty significant chunk of change coming into new ETFs that are potentially going to launch in the coming weeks and months.
All eyes on that May 23rd spot Ether ETF application. James Seifert, raising those probabilities. We love having you on. Thank you very much from Bloomberg Intelligence. Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York. Let's get you a quick check on these markets halfway through this trading day. And we're seeing, just sensitivity, shall we say, to the markets right now as we still are near those record highs across most benchmarks in the United States. We're just down by 5 points on the NASDAQ 100 as we digest some Fed speak today. How quickly might we see rate cuts? Raphael Bostic saying, maybe we're going to reanalyze really where the neutral rate lies. Stock 600 currently off by 0.2%. Europe under pressure as we wait with bated breath for some key earnings that we'll get to in a moment. But I'm also having a look at what's happening in the crypto space. We're just talking about it on the up and up. In particular, I shine a light on what's happening with ETH. We're currently up more than 8% as we potentially start to get ourselves ready for a spot ETH ETF here in the United States. Move on. Let's have a look at what's happening on individual stocks on the move. Amazon down by more than a percentage point. Really interesting story coming here, being reported by the Financial Times that maybe Amazon is putting pause on its demand, or at least its orders for the most high rate and most sophisticated tech chip architecture coming from NVIDIA. And instead of getting that Grace Hopper, they're waiting and they're going for the Grace Blackwell. Well, NVIDIA is still up 0.1% in spite of that, perhaps just air pocket as Citigroup has been talking about. We get the earnings after the bell on Wednesday. Microsoft up by almost a percentage point. They are enhancing Copilot in particular. They're racing Google. Remember yesterday we're hearing how they're taking on Apple with the new AI PCs. But we've got so much to hear from the leader of Microsoft right now because they are launching the Team Copilot. And they've got a new AI feature that's going to be helping you with your project management, fostering competition, he says. Now, the chairman and CEO, Satya Nadella, sat down with Bloomberg Originals host Emily Chang, and they talked about just how it can help with maybe a little bit of drudgery in meetings. Take a listen.
And everybody complains about meetings, but what one should really complain about is not being prepared for meetings, not paying attention in meetings, not remembering what happened in meetings. The Meetings Copilot helps keep the knowledge always front and center for an organization. So the feature we are launching is really this thing called Team Copilot. This Team Copilot is going to be in the meeting and everywhere your team is working on. For example, if you're doing a project and you want project management assistance, this Team Copilot will help help you and all your teammates. It's kind of like having an AI teammate that helps you.
Well, on that note, for all of this to really work, you've really got to trust your PC with everything about you. Will it know you better than a real assistant or a friend or a colleague? And are we in relationship territory?
Yeah, it's a super important one, right? Which is, to me, there are two things. One is, how should one think about privacy? How should one think about safety? And then the third is, how should we relate to AI, right? All of these are important. So let's take them, even unpack them, right? On the privacy side, that's where I think there are going to be needs for real private information. And whether it's in the enterprise side, where people say, don't train on my data, that's the assurance we have for anybody in the cloud even, or the new PCs we just launched yesterday, right? Which are all about keeping everything that you're doing on the PC local. So that's on the privacy side. Safety is another one, right? Which is, how do I make sure that whatever I am doing is safe? I'm safe from adversarial attacks. And then the third is the relationship side is like, I don't like anthropomorphizing AI. I sort of believe it's a tool. It is got intelligence, if you want to give it that as moniker, but it's not the same intelligence that I have, right? I think one of the most unfortunate names is artificial intelligence. It's a different, I wish we had called it different intelligence even, because I have my intelligence. I don't need any artificial intelligence. I just want my intelligence to compose with this different intelligence so that I have more agency, quite frankly.
Microsoft Chairman, CEO Satya Nadella there, with Bloomberg's Emily Chang. Now let's turn our attention to another key company on the move, and shares of Palo Alto Networks have been under pressure. That's as the company telling us where its forecast is going. Fourth quarter revenue coming in $2.15 to $2.17 billion. Now we get a chance to talk through those forecasts and where the direction of strategy is with Nikesh Arora, who's Palo Alto Networks CEO. And Nikesh, it's great to have some time with you. And I think ultimately the forecasts we used to get, the growth we have been used to of revenue from Palo Alto Networks is what, 20%, 30% year-on-year growth. We're now having to get more used to potentially an 11% growth perspective. Is this buyer fatigue for cyber?
Not really. First of all, Caroline, thank you for having me here. Remember, we are planning to deliver close to $2 billion of revenue in Q4. That makes us close to an $8 billion company for the year. And our growth rates are forecast between 10 and 15%. So there is no buyer fatigue in cybersecurity. We are the first company to break the barrier and get to that scale in cybersecurity, making us north of $100 billion of market cap. So no, I think cybersecurity is a very robust market from a demand perspective, and our teams are executing amazingly around the world.
Let's talk about where, therefore, the robust demand comes from and what for. You've talked a lot about ultimately sort of being an everything offering. A platformization is what is necessary. That's heart of the strategy, if I'm correct. The idea that, yes, you want to be able to ensure that all parts are sophisticatedly protected, but how does that win out versus what people have called sort of a best-in-breed offering, where you're focusing on one particular element of cyber?
I think the important way to think about it, Caroline, is if you think back 15, 20 years ago, we used to have a multitude of applications across our enterprise which did customer management things. Today, you don't think about having 15 different applications to manage your customers. You either use Salesforce or Oracle or Microsoft Dynamics. You don't use 14 best-of-breed applications to solve your customer problems. Take the problem in HR. You use people systems, whether it's Workday or others. So you are getting to a place where these concepts require integration across these best-of-breed capabilities. Otherwise, the onus of integration goes on the customer, which means every customer has to be able to take these best-of-breed, stitch them together, and create amazing security outcomes. On the other side, you got bad actors who've changed their tactics. They can get in and out of your business in under an hour and exfiltrate large amounts of data. So I think it's a problem that's stacked up against companies if they plan to stitch this stuff together for years to come. That's why we need to move towards a more integrated, things that work together, and a more real-time outcome of security strategy as opposed to the best-of-breed strategy, which has worked historically.
But with your shares under pressure, is the market understanding that? Is the market saying, okay, yeah, I buy the platformization?
Well, our shares have done very well over the last 1 year. I think these short-term bumps are part of the absorption by the market of where the market needs to go. We've done really well in the last 5 years. We've already done really well in the last 1 year. I think the important part is to understand it's a very strong demand market. We're executing amazingly. We are the largest player in the market, and the number of conversations, the number of platform deals we did this quarter far exceeded any that we've done in history, which sets us in the right direction to try and achieve a $15 billion ARR number, which we've targeted in the next few years. So we think things are on track, and we're executing.
You're liking the ARR number. There is a number in your metrics that you don't like people really focusing on, and that's the billing forecast. You say, look, it's volatile, and ultimately it's sort of an artificial metric. But can you talk us through that a little bit? Because why is it artificial? You say it's due to payment terms changing, but everyone's a bit worried about this billing forecast being the slowest since your IPO.
Well, I think what happened is when we lived in a zero interest rate environment, people were willing to pay you up front for years of upcoming service. Today, CFOs get involved. They're saying, listen, I'll pay you when you deliver the service. You look at the companies you name, the companies that are in the ARR business, which are on an annualized payment plan. There, they give you ARR and annual values, and that seems to work. For us, people look at, are you collecting all the money up front? So that's what billings is. In our view, the right number is RPO, or remaining performance obligations. Our RPO grew at 23%. We have $11.5 billion worth of services we intend to deliver to our customer over the next 3 years. So that's an important metric. The growth is important because that tells you how big your book of business is that is committed by your customers. That gives you a true understanding of the strength of the business. I think billings can be managed depending on when customers choose to pay you. So I think that becomes a less reliable metric, particularly in a higher interest rate environment where customers are cautious about when they want to pay you.
Is there likely to be pressure on contract length going forward, though? And what does that say about enterprises' desire to commit to cybersecurity protection?
Actually, things are in the opposite direction, Caroline, because if you take a longer contract, you get price protection, and in a higher interest rate environment, you have the risk of higher prices in the future. So actually, you're seeing customers saying, guarantee me the price for longer, because I don't want to deal with inflationary impacts of price increases.
I have to say, when you look at ultimately what all the analysts are saying versus your particular earnings, they really are saying, look, this is a knee-jerk reaction. You've got Vital Knowledge really saying the core fundamentals remain very healthy. A lot of the analysts out there saying they believe in the leadership right now. Nikesh, talk to us therefore about what you believe and how artificial intelligence is changing your role as a leader and changing the way in which we protect against cybersecurity. We all talk about how much harder it's made life, but has it really in terms of attacks?
Well, Caroline, let me break that question in two parts. First, in the last 5 years, our company has gone up 5 times in value. So I think we've done really well for our shareholders. We've really done really well from an execution perspective. We're one of the largest companies now. We have an evergreen portfolio, like you mentioned, and we brought the notion that large cybersecurity companies can continue to innovate so our customers don't have to. In that context, if you look at AI, most recently we announced a series of AI security products because the enthusiasm for AI, both on, unfortunately, the bad actor side and the company side is high. People want to trial AI. You had a segment earlier where we're seeing co-pilots being introduced. So everybody wants an AI buddy, an AI assistant to make their lives more productive. In that environment, every company is raring to go out and deploy that technology. Now, you got to be careful when you deploy it. It has to be secured by design. You have to make sure these LLMs don't hallucinate. You have to make sure nobody gets inside your LLM, poisons it with lots of data. And we're going to see a lot of those attempts because bad actors have also learned the technology. So it's very important to deliver AI in such a way that it is secure for our customers and their end customers. And we've already pioneered at RSA most recently a comprehensive suite of products which we intend to make available to all of our customers in the next 4 weeks, which allow them to go down this journey and be secured from the get-go.
Palo Alto Networks CEO Nikesh Arora, thanks for spending some time with us on your latest results and indeed the latest threats that you're trying to combat. Meanwhile, coming up, we're going to be hearing from the CEOs of Dell and NVIDIA, both, of course, at the Dell World Conference in Las Vegas, and they sat down with our own Ed Ludlow. And let's just check in on what Sonos is doing. Yeah, you know them for speakers. Well, now they want to get in your headphone space too. The market they see for a $449 device. It's all part of their effort to basically go from home speaker company to a broader maker of consumer tech. We're up 0.9%. This is Bloomberg Technology. Now, the Dell World Conference is still in full swing today in Las Vegas. Ed Ludlow, he sat down yesterday with some of the keynote speakers, which included Dell Chairman and CEO Michael Dell and NVIDIA CEO Jensen Huang. Take a listen.
At Dell Technologies World, we love to bring our customers and partners together and talk about what's new and what's exciting. And, this AI opportunity is really tremendous. And we can never do anything by ourselves, but this is a great example of how you have an ecosystem of companies coming together along with all these incredible innovations in GPUs and compute, and storage and networking and all the AI models and software companies that are utilizing all this power. And it's causing a new industrial revolution.
There are 5 things that I would like to talk about. The first being the relationship between the 3 of you and your companies, how you work together. The second being AI infrastructure, how durable what's happening is. AI PC. You've been talking about AI PC on social media for some time, and officially, of course, as well. US leadership. I reflect that I have 3 American CEOs sat around me, all pulling towards the same sort of goal. And finally, increasingly, people ask me to ask you about power and energy consumption. And whether we should start talking about that. But really, Jensen, the origin of this, and one of the reasons I wanted to have the conversation was GTC. I'm paraphrasing, but you said basically there is no one better at end-to-end systems at scale than Dell. You basically said if you want a server, you phone Michael Dell. But why? Specifically, how is it that NVIDIA interacts with that part of Michael's business?
Well, this is a really important time. We've re-engineered and reinvented every layer of computing, from the chip to the operating system to the system servers to the way that these data centers are put together. There's only one company in the world that can have the ability to build the computing system, the storage system, the networking system, all of the software that goes along with it, and the path to the world's enterprise. We want to bring this generative AI capability to every company in the world. And some of them can use it in the cloud, but many of the applications still has to be done on-prem. And so in order for us to bring them into the generative AI revolution, we're going to have to go through a partner that can help us take this completely new reinvention of a computer, the data center, these AI factories, and help every customer have a
just really quickly, Jensen.
Yeah.
On-prem is back. Just really quick. Yes or no?
Oh, on-prem never left.
Okay.
But on-prem never left. But on-prem is cool again.
As if it ever wasn't cool. We thank him, of course, NVIDIA CEO Jensen Huang. It was Dell Chairman and CEO Michael Dell speaking, of course, along with our own Ed Ludlow and alongside the ServiceNow CEO Bill McDermott. You probably caught a lot of it yesterday, but it was a great interview. Meanwhile, let's just talk about AI and the startup scene there. Scale AI. It's helping, of course, top tech companies improve the data used to build AI products, basically to ensure that it's tagged in the right way. It's roughly doubled its valuation to get this $13.8 billion, and it's raising $1 billion in one of the largest financing deals of the year. The round was led by Accel with participation from a mix of new corporate backers. They're all the rage too now. Amazon, Meta, venture arms from AMD, ServiceNow, and indeed Intel. Meanwhile, coming up, we've just been noting that Disney's saving some money. They're continuing to do that, with Pixar announcing layoffs to the tune of some 14% of the business. We'll have all the details next. It's been going viral. Actress Scarlett Johansson said that she was, quote, forced to hire legal counsel to demand the removal of an artificial intelligence voice for OpenAI's chatbot that sounded eerily like herself. Bloomberg's Rachel Metz joins us for more. And basically, this is Sky. And we already heard that maybe OpenAI was pressing pause on the use of Sky.
Yeah, absolutely. So just the other day, OpenAI stopped using the voice, at least for now, and users would, if they tried to use it within like the ChatGPT app, for instance, they would hear a different voice called Juniper. I do think it's important to remember these voices, and the Sky voice in particular, didn't just launch. They actually launched last year in September, which Scarlett said is around when, or is the same month when Sam Altman reached out to her and asked her if she'd be interested in presenting one of these voices with her voice.
And she decided, after a lot of thought, apparently, not to provide her own voice. Now, all of this, of course, goes back to the fact that there was a movie, years old now, called Her, where Joaquin Phoenix plays a part that falls in love with an artificial intelligence, well, chatbot, basically, who happens to be voiced by Scarlett Johansson. Interestingly, we saw Sam Altman, just while the announcements of ChatGPT 4.0 were launched, he put in a post just literally Her. But he says it wasn't based on Scarlett Johansson.
Yeah, I mean, that's kind of tricky, right? I mean, you're tweeting Her, and everybody knows what you mean by that. And I guess you could say, oh, well, it is an homage. But it sounds like she didn't want any part of it. So I think it's going to be really interesting to sort of see what the next move is, either from OpenAI or from Scarlett Johansson's camp. As far as what happens next, I mean, will this voice come back? I don't know. It's another actress, but it did sound quite a bit like her. I think a lot of people would agree.
And to be sure, OpenAI have tried to make clear how they found this voice. And it was found a year ago through 400 applications, and they managed to find these 5 voices they eventually went with. But there is another actress who just so happens to sound a bit like Scarlett Johansson, who now might not get paid for the use of it within the app.
Yeah, I mean, I think we also need to keep in mind that this is a real person's voice that is being used to train a voice model. So I have no way of knowing how much modification has been done to the voice. You know, they would have recorded probably quite a number of samples of this person speaking. And then I'm not really sure what kind of tweaking they would have done to present the final actual voice. So it's possible that there was some work done there. Maybe they just need to change the voice a little bit. Maybe they need to retire the voice. Maybe they're going to say, you know what, this is not her voice, so we're going to keep using it. It'll be interesting to see what happens.
Well, certainly it's highlighted that there are more voices on ChatGPT 4.0, at least for many. Rachel Metz, we thank you so much for running us through what is almost a bit of a celebrity story. But sticking with content for a moment, Pixar, the pioneering animator that made, of course, Toy Story, Finding Nemo, is cutting 14% of its staff as part of an ongoing cost-cutting effort with parent company Disney. Felix Gillette here briefly for more. And, well, we'd anticipated that we would see cuts here.
Yeah, I mean, this is part of Bob Iger's broader term to bring down costs at Disney. Pixar, you know, for years couldn't do anything wrong. They just had hit after hit after hit. During the pandemic, they released a couple of movies right to the streaming service. You know, their last couple, Elemental was not a big hit. Lightyear was not a big hit. So this has kind of been expected for a while. They also, at some point, switched to, you know, envisioning doing more TV production for the streaming service. And now they've basically decided we're going to go back to just making movies. So it's related to that also.
Is there any way, and briefly, we could say that AI is going to be doing it?
I mean, I'm sure that AI will be part of the mix. That's not what they're crediting these cuts to at this point. They are pointing to the shift back to movie production. And again, there's been, you know, Bob Iger's been looking for, you know, something like $8 billion worth of cuts all across Disney. So this has been just the latest of multiple waves of people losing their jobs.
Felix Gillette, thank you for running us through it with Disney. Meanwhile, that does it for this edition of Bloomberg Technology. Don't forget to check out the podcast. You can find it on the terminal as well as online on Apple, Spotify, iHeart, wherever you get your information. This is Bloomberg.